Hello, and welcome back to Boni's Life, your premier destination for navigating the exhilarating and often bewildering world of cryptocurrency. I'm your host, Boni, and today we are embarking on a comprehensive deep dive into the crypto market's performance over the last 3 days, with an intense focus on the tumultuous past 24 hours. We will be meticulously dissecting the technical and fundamental analysis, exploring the global macroeconomic events that are sending shockwaves through the trading markets, and hearing from some of the most respected and influential voices in the industry. So, whether you're a seasoned crypto veteran with a diversified portfolio or a curious newcomer just beginning your journey into the digital asset space, you have come to the right place. Prepare for an episode packed with insights, analysis, and a touch of humor to keep things engaging. Let's get into it. The last 72 hours in the crypto market can be best described as a dramatic symphony of volatility, with moments of soaring highs and gut-wrenching lows. The global crypto market capitalization is currently hovering around the monumental figure of $4.17 trillion. However, this impressive number is actually down by 0.8% in the last 24 hours, indicating a slight cooling off in the market. We've also observed a noticeable dip in trading volume, which now stands at $143.7 billion. This suggests that traders are becoming more cautious, perhaps waiting for a clearer signal before making their next move. The bears have certainly been active, with 8 of the top 10 cryptocurrencies displaying red on the 24-hour chart. Let's meticulously break down the performance of the major digital assets. Bitcoin, the undisputed king of cryptocurrencies, is currently trading at $116,601, reflecting a 0.6% decrease on the day. However, it's crucial to look at the bigger picture. Bitcoin is still up by a respectable 1.3% for the week, demonstrating its inherent resilience and ability to bounce back from short-term dips. Ethereum, the powerhouse of decentralized finance, has experienced a more significant setback, dropping by 1.6% to $4,522. This brings its weekly performance to a slight decline of 0.2%. The biggest loser among the top-tier cryptocurrencies is XRP, which has plummeted by 2.6% to $3.03, a significant drop that has many investors on edge. We're also witnessing a sea of red across the altcoin market. Solana, a favorite among developers for its high-speed transactions, is down by 1.6%. Lido-staked Ether, a key player in the liquid staking space, has slipped by 1.7%. Cardano, known for its research-driven approach, has declined by 1.7% to $0.9017. And even the beloved meme coin Dogecoin has not been spared, dropping by 2.5% to $0.2736. But amidst this bearish sentiment, there are a few glimmers of hope. BNB, the native token of the Binance ecosystem, has defied the trend, rising by 0.7% to reach $994.72. Chainlink, the leading Oracle network, has also shown strength, edging up by 0.3% to $24.40. And if we venture into the world of trending tokens, we discover some truly explosive gains. Trust Wallet has skyrocketed by an astonishing 36.2% to $1.10, followed by APX with a remarkable 31.1% jump, and Linear with a solid 10.6% rise. On the other end of the spectrum, Asta has been the weakest trending token, plummeting by 10%. So, what is the underlying narrative behind these fluctuating numbers? From a technical analysis perspective, traders are laser-focused on the key support levels. For Bitcoin, the critical zone to watch is around the $115,000 mark. For Ethereum, the line in the sand is at $4,500. These levels are not just arbitrary numbers, they represent significant psychological and technical barriers that will likely determine the market's short-term trajectory. According to Axel Adler Jr., a respected analyst at CryptoQuant, we can anticipate Bitcoin entering a brief consolidation phase for the next 1 to 2 weeks before potentially making a push towards a new all-time high. He astutely points out that BTC is currently trading just above the short-term holder realized price, a crucial support level based on the cost basis of wallets holding coins for up to 6 months. This is a vital indicator that could signal a bottom for the current correction, providing a potential entry point for savvy investors. Now, let's broaden our perspective and examine the macroeconomic forces that are shaping the crypto landscape. The digital asset market does not operate in isolation. It is deeply and inextricably linked to global economic events. The most significant news of the week, without a doubt, is the Federal Reserve's decision to cut interest rates for the first time since December. The Fed has lowered the target range for the federal funds rate to 400 to 425 basis points, a move that was widely anticipated and to a large extent already priced in by the markets. Interestingly, the crypto markets did not experience the immediate and explosive surge that many had predicted. Bitcoin was trading in a tight range between $115,000 and $116,000 when the announcement was made, and it exhibited very little volatility in the hours that followed. Ethereum also experienced some modest fluctuations, dipping to around $4,430 before rebounding to $4,620. So, why the subdued reaction to such a significant monetary policy shift? According to Julio Moreno, the head of research for CryptoQuant, the 25 basis point rate cut had already been factored into market prices. He stated, "Today, we did not see much volatility as the Fed interest decision had been long anticipated. The market was seeing a 25 basis point cut with above 90% probability." Brian Huang, the co-founder of the fintech firm Glider, shared a similar view, saying, "Crypto markets had widely priced in today's rate cut, and so BTC and ETH are flat on the day. However, it is the long-term implications of this rate cut that truly warrant our attention. A lower interest rate environment has historically been a bullish catalyst for speculative, non-interest-bearing assets like cryptocurrencies." As Chin N. Loy, the managing partner at venture capital firm Onigiri, eloquently put it, "The Fed's rate cut today is a positive signal that liquidity is back on the table, resulting in a short-term boost in sentiment." Moreno also believes that this could be a positive catalyst for risk assets and could mark the beginning of a sustained rally into the fourth quarter, as the Fed has indicated that more interest rate cuts are on the horizon. But the story doesn't end with the Federal Reserve. We are also witnessing some fascinating political developments that could have a profound and lasting impact on the crypto market. In the United States, Michigan's Bitcoin Reserve Bill has successfully passed its second House reading. This groundbreaking bill would permit up to 10% of Michigan's state reserves to be allocated into cryptocurrencies, setting a potential precedent for broader state-level institutional adoption. This is a monumental step forward for the legitimization of crypto as a viable and respectable asset class. Now, let's turn our attention to the experts and see what they are saying about the current state of the market. Tom Lee of Fundstrat, a highly respected and influential voice in the crypto community, has made a characteristically bold prediction. He believes that Bitcoin could easily reach the staggering price of $200,000 by the end of 2025. That's a nearly 100% increase from its current price, a prospect that is sure to excite even the most jaded crypto investor. His prediction is largely predicated on the expectation of a series of Federal Reserve rate cuts, which he believes will unleash a torrent of new demand into the market. However, it is essential to maintain a balanced and critical perspective. Online prediction markets are currently indicating only a 30% probability of Bitcoin hitting $150,000 this year, and a mere 5% chance of it reaching the lofty target of $200,000. So, while Tom Lee's prediction is certainly exhilarating, it is by no means a guaranteed outcome. Another influential figure, Michael Saylor of MicroStrategy, continues to be a relentless and vocal proponent of Bitcoin. He sees it not just as a digital currency, but as digital capital that is fueling a fundamental and revolutionary rebuild of the entire financial system. He envisions a future where institutions can issue digital securities and digital credit on digital capital, trading 24/7 in crypto-native channels. Saylor is also a staunch supporter of the U.S. strategic Bitcoin Reserve Bill, which aims to hold 1 million BTC over 5 years using Federal Reserve assets. This is a truly audacious vision that could have a profound and transformative impact on the future of finance. And we cannot discuss institutional adoption without mentioning the formidable Cathie Wood of ARK Invest. Her firm has been making some significant and strategic moves in the crypto space. ARK Invest recently added $8.3 million in bullish crypto exchange shares and made a massive $162 million investment in Brera Holdings for a Solana-based digital asset treasury. These moves demonstrate a strong and unwavering belief in the long-term potential of crypto infrastructure and exchange platforms. From an institutional perspective, Galaxy Digital's September 2025 market commentary provides some invaluable and illuminating insights. They note that while Bitcoin reached a fresh all-time high of over $124,000 in mid-August, it has since experienced a significant retreat. Ethereum, on the other hand, has been outperforming Bitcoin, breaking through its previous cycle ceiling and reaching an impressive $4,953. This has propelled the ETH/BTC ratio to its highest level since November 2024, a clear indication of Ethereum's growing dominance. Galaxy Digital also emphasizes the growing influence of institutional players in the crypto market. They astutely point out that ETF activity is increasingly shaping crypto price action, with ETH emerging as a clear leader in this phase of the cycle. They also highlight the significant role of digital asset treasury companies, which are continuing to accumulate assets with a particular focus on Ethereum. A $1 billion allocation to ETH, they argue, can materially shift market dynamics in a way that the same allocation to BTC cannot, due to Ethereum's smaller market capitalization. Of course, no analysis of the crypto market would be complete without a thorough discussion of the ever-evolving regulatory landscape. The actions of regulators can have a profound and immediate impact on the market, for better or for worse. Former SEC Chair Gary Gensler recently defended his agency's regulatory stance on cryptocurrencies, stating that it was aimed at ensuring investor protection. While his tenure was characterized by a series of high-profile enforcement actions, the SEC has also recently revised its rules to pave the way for new spot crypto ETFs. This is a significant and positive development that could open the floodgates to a new wave of institutional investment. However, there are also some lingering concerns on the regulatory front. In the United States, there is a growing and contentious debate around central bank digital currencies. The House GOP has moved to combine a CBDC ban with a broader crypto market structure bill. This highlights the ongoing uncertainty and political division surrounding the future of digital currencies, a debate that is likely to continue for the foreseeable future. So, what does all of this mean for you, the discerning investor? The crypto market is at a fascinating and pivotal crossroads. We are witnessing a complex interplay of bullish and bearish signals, with technical indicators suggesting a period of consolidation, while fundamental factors like the Fed's rate cuts and the relentless march of institutional adoption point to a positive and promising long-term outlook. The key takeaway from today's analysis is that the crypto market is maturing at an accelerated pace. It is no longer just a niche market for retail investors and early adopters. Institutional players are here, and they are here to stay. This brings a new level of sophistication, complexity, and ultimately legitimacy to the market. As always, it is absolutely crucial to do your own research and make informed and rational decisions. Do not just blindly follow the hype. Take the time to understand the underlying technology, the intricate market dynamics, and invest wisely and responsibly. And of course, stay tuned to Boni's Life for the latest news, in-depth analysis, and actionable insights. That's all the time we have for today's deep dive. I hope you found this analysis to be both informative and engaging. If you did, please show your support by giving this video a thumbs up, subscribing to the channel, and hitting that notification bell so you don't miss our next episode. And I want to hear from you. What are your thoughts on the current state of the crypto market? What are your predictions for the remainder of the year? Share your insights and opinions in the comment section below. Previously, we had an episode about deepfakes, and in our next episode of Token Spotlight, we will spotlight one of the tokens intended to address the proof of personhood or identity. Don't miss it. Have yourselves a wonderful weekend. Thank you for watching, and I'll see you in the next one.